Hey everyone, welcome back to Corporate Decoder. On today's episode, we're diving into SunPower Incorporated's latest report, and let's just say things are getting interesting with their financial arrangements, and it really makes you wonder what is cooking behind the scenes. Before we start unpackaging this report, if you appreciate getting straight, unfiltered insights from these corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down these filings further and discuss them. So go ahead and join the conversation. Alright, so first things first, SunPower Incorporated, also known by its ticker symbol, SPIO, is making some notable adjustments to its financial agreements. They've entered into an amendment to a stock purchase agreement with White Lion Capital LLC. Now this sounds like a mouthful, but what it really means is they are tweaking the deal they have with investors to potentially sell more of their stock. This amendment extends the time frame during which SunPower can sell its shares to White Lion. It also increases the total amount of money SunPower can raise from this agreement up to a hefty $55 million. This is a big deal because it signals that SunPower is looking to secure significant funding for its future operations or projects. Think of it like an extended credit line, but instead of borrowing money, they are selling pieces of the company ownership. The date of this report is the 12th of January 2026, and it outlines significant changes to their financing strategy. It also tells us that SunPower is classifying itself as an emerging growth company, and has elected not to use the extended transition period for adopting new accounting standards. This means they are up to date with the latest financial reporting rules, which is generally a good sign for transparency. So the core of this filing is about a material definitive agreement, which essentially means a significant legally binding contract. SunPower and White Lion Capital LLC have modified their existing stock purchase deal. This isn't a brand new deal, but an amendment to an agreement that has already been amended twice before. This continuity suggests a steady working relationship, but also a series of adjustments to meet evolving needs or market conditions. This amendment basically extends the period for this investment deal until the end of 2027, or until White Lion has bought the full amount of stock they committed to purchase. And here is the kicker: they are looking to raise the total amount of money they can get from this agreement up to $55 million. This means SunPower could potentially sell up to $55 million worth of its stock to White Lion. This is crucial because it's not a done deal yet. It needs approval from SunPower's own shareholders. This shareholder approval is a key hurdle to clear before they can access this substantial funding. Now here is a really interesting part of this amendment. They've added a new feature that allows SunPower to ask for immediate purchases of its stock. Imagine SunPower can say, "Hey White Lion, I need some cash right now," and they can get it within 3 hours. The price they get for these shares will be based on the lowest price the stock traded at during that short 3-hour window after White Lion agrees to the request. This gives SunPower a lot of flexibility to raise cash quickly when it needs it most, perhaps to seize a time-sensitive opportunity or to manage short-term cash flow issues. It's a powerful tool, but it also means they might have to sell shares at a less than ideal price if the market is dipping. This section is about selling stock without having to register it with the securities authorities. This is a common practice for companies when they are dealing with sophisticated investors like White Lion Capital. This exemption streamlines the process, allowing them to raise capital more efficiently. The filing states that these sales will be exempt from registration under Section CR, the Securities Act of Itendio by SN. This basically means it's a private sale to a select group of investors not available to the general public. This part is all about the documents that back up the report. The most important exhibit here is Exhibit 10.1, which is the actual amendment to the stock purchase agreement itself. This is the document that contains all the legal nitty-gritty details of the deal we've been discussing. And finally, the report is signed off by Thurman J. Rogers, the Chief Executive Officer of SunPower Incorporated. His signature on this document signifies the company's official acknowledgement and intent regarding this financial maneuver. So what's the big picture here? SunPower is actively seeking to bolster its financial position by potentially raising up to $55 million through a stock purchase agreement with White Lion Capital. The extension of the commitment period and the addition of a rapid purchase option indicate a strategic move to ensure financial flexibility and access to capital. Shareholder approval is a critical next step. This move suggests SunPower might have upcoming projects or expansion plans that require substantial funding, or perhaps they are building a financial cushion to navigate potential market uncertainties. It's a proactive step to secure their financial future and maintain operational momentum. Now, looking at this filing, the absence of detailed financial tables in this 8K format means we don't have an immediate snapshot of their current revenue, expenses, or profitability. This particular report is focused on a significant contractual development, not a quarterly financial performance review like a 10Q. However, knowing that they are actively raising capital implies a need for it, which could stem from growth initiatives, increased operational costs, or strategic investments. Wednesday need to look at their latest 10Q or 10. K for the detailed financial health of SunPower. One of the key risks here is the reliance on securing shareholder approval for the increased commitment amount. If shareholders don't approve it, the $55 million infusion won't happen, limiting their financial maneuverability. Another aspect to consider is the rapid purchase option. While it offers flexibility, it could lead to share dilution if executed during periods of low stock price. This could affect existing shareholders' value. On the opportunity side, successfully raising this capital could fuel significant growth, faster product development, or expansion into new markets, which could boost SunPower's long-term prospects and competitive position. Alright, that is our breakdown of SunPower Incorporated's latest filing. What is your take on these financial arrangements and what they signal for the company's future? Do you think the rapid purchase option is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we will see you in the next video.